Hi there, welcome to Kneppy Invest, and welcome to a new trading day and week. Market has about 1 hour left, and it's been a pretty awesome day, I must say. Everything looks like it is up, apart from its gold might be down a little bit, but we'll have a look at how gold has performed in a second or so. But first, the agenda for today's video. Now, it is a pretty big reporting week in the United States. I'll get to that in a second via one email I do receive every single day, even on the weekends, maybe only one email on the weekends. But this is one of my most favorite emails because of what it gives me or the information it gives me. And then we'll have a look at what happened or what has happened on the ASX today. I'll also include the best performing and the worst performing companies on the ASX. Have a look at the indices and the sectors, see which ones have done well today, and majority have done well, except for gold and I think maybe also energy. We'll see if I'm right in a second or so. And then we'll go through top 5 announcements, and they include Air New Zealand, Base Resources, and I can almost guarantee you that will be the top announcement of the day. South 32, Credit Clear, and Droneshield. We'll also have a quick look at Ramelius, Austco Healthcare, Graffiti, GTI, and Babylon Power and Pump. Maybe also Sequoia Financial. They did give a bit of an update, but their update financial guidance was unchanged from what they've previously given us. And then we'll go through the rest of the Appendix 4Cs and maybe 5Bs. However, I don't remember any significant 5Bs that were released today. And then we might have a look at some charts. Yeah, why not? Have a look at some charts. So first, one of my favorite emails. Here it is. I'm going to show you right now. So this is called Earnings Whisper. Receive this most days, and before the start of the trading week, they give the most anticipated releases for the week. And don't forget, America reports on a quarterly basis. So a massive amount of reports are being released this week. So they've also got here Monday, Tuesday, Wednesday, Thursday, Friday, and all the companies here. So just by looking at these companies, we have Tesla, Visa, Texas Instruments, General Electric, PepsiCo, Spotify. That's all on the same day, which was on Tuesday. Not much on Monday. Verizon, Albertsons, which is a supermarket I used to go all the time. Bank of Hawaii. Yeah, I think most states have probably a bank. Then on Wednesday, we have Boeing, AT&T, Meta, IBM, Ford, Chipotle, Mexican Grill, whatever you pronounce it, Boston Scientific, don't know that one, and Hilton, General Dynamics. And then on Thursday, we have Alphabet, Microsoft, Intel, Snap, Roku, Caterpillar, Southwest, AstraZeneca, Bristol Myers Squibb, Newmont, Royal Caribbean Group. And on Friday, let's not forget the oil companies, ExxonMobil, Chevron, and that's about it. So a really interesting, important week, and how some of these tech companies report this week might be important to what the NASDAQ does, because we had a pretty violent down week last week. Now, the other thing I like about this email, apart from right there, is they go through most of the more significant reports and the expectations. For instance, Tesla is expected to miss estimates. Meta is expected to beat estimates. Microsoft expected to beat estimates. Alphabet expected to beat estimates. Intel, Verizon, ExxonMobil, Visa, General Motors, UPS. And then what they also do, if they might have not included in this one. Here we go. Yeah. So what they've also do is they go through the reports that have been released, and they go and they tell us whether those reports beat or missed expectations. So even though Netflix share price went down 10% or almost 10%, it actually beat expectations. Taiwan Semiconductor Manufacturing beat expectation. ASML missed expectations. United Health Group beat expectations. and so on and so forth. And there's Bank of America, beat expectations. So one of my favorite emails, get this, at least once a day, maybe 6 times in a week, maybe not twice on the weekend, but it is one of my favorite emails to go through. You might notice I've got 14,847 emails that have yet to be read, and that goes back quite a few years. So I only go through the emails I like to read and skip the rest. Anyway, so that's enough about emails. You're probably bored about that already. Don't really need to look at FinChat in this video, I don't think. So let's have a look at how the market has performed today. So everything's up. Well, most everything. So ASX 200 up 0.94%, and small caps up 1.22%, tech up 0.9%, resources only up 0.65%. So let's have a look at the sectors and the indices. And yeah, energy is down 1.31%, but everything is up quite well, including healthcare, up about 1.7%, industrials 1.4%, staples 1.2%, materials up 1.1%, and small caps is the best performing indice based off this, but that does not include all the indices. So let's include all the indices, and the best performing indice is healthcare, industrials, and then small caps, and only 2 indices are down. Gold down almost 2%. That was to be expected. I did see some gold companies were struggling today, and energy down 1.33%. And emerging companies not doing as well as some of the other ones. And we have banks there as well, which is not surprising. I did see ANZ Bank was down. And the reason I looked at that is because I sold that on Friday. Maybe a small loss, but that's the thing. If the share price of a company is not moving in the direction I think, I'll take a small loss. I don't want that loss to magnify over time. That is my trading philosophy. Take small losses. Let your winners win. Let your winners run. I was going to say runners win. What was I going to say? Let your winners run. Yeah, winners won. I have what's it called? Lord something. Spoonerisms. I'm afflicted with spoonerisms. Nothing debilitating, but sometimes you might hear me say weird stuff. Like, instead of let your winners run, let your winners won. Yes, that is a spoonerism. Okay. Yeah, so we've had a look at the indices. Now let's have a look at the best performing and worst performing companies on the ASX today. And maybe I'll change my opinion on the best top 5 announcements of the day. Definitely won't change with number 1, Base Resource. And you'll be able to see that when we have a look at the best performing companies, or the top gainers. And there at top is Base Resources, up 114%. And I have bought some shares in Base Resources. In fact, I was a holder of this company, a long-term holder of this company, and then I bought some trading shares today. And that's already up 25 to 30%. So I bought it at 18.5. And if I remember, I'll show you the chart of Base Resources. Well, it's probably irrelevant now. It's not really why I bought. I just thought where the share price was when I bought, it was just ridiculous. And you'll probably understand why I'm thinking that. Osteopore, 68%. And none of these companies, I remember, releasing any announcements. And you can tell if a company hasn't released an announcement just by the turnover. So Osteopore turnover is only $19,000. So look at Base Resources, turnover of $5.9, almost $6 million just today. Maybe Imaging released something today. I can't remember. In fact, if you don't remember, this is what I do. You might have seen me do this in another video. You just go to Market Index, and there we go. Yeah, no announcement's been released, so don't really have to worry about that. Now let's have a look by market cap. So Zip's had an okay day, nice bounce. Bravura has had a nice day. That's good because Bravura was getting very close to a sell point. Jupiter Mines up, Development Mines, a lot of mining companies here. Nickel Metals X is up. Aurelia Metals, it's Aurelia Metals gold or copper? 29 Metals is definitely copper. Well, 29 Metals, it's there in the name. Calix, there's Base Resources. Michael Hill is up. Premium, but no in crypto. Innovators ETF is up. That's interesting. So no, nothing there apart from Base Resources. So all my other companies that were announcements of the day or did not quite get there are not in this list. Okay, so let's have a look at the top losers today. First by percentage change. There's Droneshield, which has come in at number 5. And if you have been following Droneshield, you would know why that has happened, why the share price of that company has dropped 17%. I'll talk about that in a second. And nothing else here. So again, a lot of these companies have fallen on very low turnover in, a couple of $1,000s for some of these companies. In fact, for Marley Spoon, turnover is only $902. So let's have a look at by market cap. Okay, Mercury New Zealand, Bellevue Gold, one of the gold companies that is down. St. Barbara, yeah, I had a look at this before, and I noticed there was a few gold companies, and that's why I was thinking gold was down today, because Bellevue Gold is down 6%, St. Barbara 10.7%. There was, here's Credit Clear, that was in my list. Number 3, top 5 announcements of the day. That company is down 10.4%, and that's about it. So let's go have a look at the announcements of the day. The top announcements of the day, starting with number 5, which is Droneshield, down 17%. Not a shock, particularly those who are following this company, down 17%. And the whole reason it's down 17% is because the company has done a capital raising, and the price of the capital raising, I completely forget right now, even though I'm a shareholder of this company, I would say it's about 90 cents. 85 cents, 90 cents. Here it should be somewhere here. 80 cents. 80 cents. So that's good. The share price has dropped nowhere near the capital raising price of 80 cents, so 93 cents. So possibly I will participate in this particular capital raising. And wherever a company announces a capital raising, the best sort of capital raising is completely to retail shareholders like you or me, but they never do that. So the majority of this capital raising was a placement to institutions and then a small share purchase plan. And I have a feeling, $70 million placement and $5 million for us lowly retail investors. It should be the other way around. And they don't begin trading until that placement is successful or has been successfully placed, or whatever you want to call it. And they announced that today somewhere. Yeah, here it is. Completion of upsized, underwritten $100 million placement. So it went from $70 million to $100 million. Why can't shareholders participate in that upsized placement? Still a pretty big capital raising for Droneshield, and hopefully this is the last one the company ever does. And that's when shares start trading, is when the companies complete the placement. Not when they complete the SPP, when they complete the placement. Anyway, now I'll maybe not be complaining because the share price, the capital raising price, is significantly below where the share price is now. So unless the share price falls to 80 cents or near 80 cents, more than likely I will buy some more shares in Droneshield, build up my base in this company, and then maybe trade it to, again, build it up. Maybe. Let's have a look at the chart for Droneshield. So all these companies, I'll have a look at the chart. We'll have a look at the 1 daily or daily chart, and then also have a look at the 1 hourly chart. So this is the 1 hourly chart, but let's start with the daily chart. Beautiful uptrend, and the share price is just going back to where it was the previous day. Not the previous day, 2 days before the big update. So not a significant discount. In fact, the discount, even though it was like a 28% discount to previous day share price, it's not much of a discount when you look at probably the VWAP over the last 20 days or so. So share price is still an uptrend. A beautiful looking chart. Massive volume coming in 2024. If you compare the volume this year to what we saw in 2023, it's just massive. It's night and day different. So many institutions, retail investors are really excited about this company at the moment. And 1 hourly chart. And yeah, it's still in a 1 hourly uptrend. Even when the director sold out, the share price did pull down, but it never moved out of a 1 hourly uptrend. And in fact, this company's been in a 1 hourly uptrend since, there it is, really, since November last year. And the share price was 28 cents. If I was following the company there using my 1 hourly time frame, I maybe could have bought a position in this company. More than likely would have, but I could, in hindsight, yeah, if I did. You can do so many things with the word if. If I was born in 1924, I would be 100 years old this year. Okay, If I met Zuckerberg at Harvard, I'd be a multi-billionaire. If Elon Musk was my father, I would be set for life. Or maybe not. Okay, so coming in at number 4, we have Air New Zealand. And this is very important, I think. So you might notice that Air New Zealand share price has done up. Oh, it's gone up. It has gone up. Who would have thought that when you see an announcement that is titled Air New Zealand reduces financial year 24 4-year guidance? This is a profit downgrade. This is the definition of a profit downgrade. So I'll talk about why the share price has not decreased when this is a profit downgrade. And it was a pretty big profit downgrade. So in light of all these things that are going wrong for Air New Zealand, including fuel prices, no one wants to fly apparently these days. So they mentioned deteriorating economic and operating conditions, ongoing softening demand, and increased competition, those sort of things. So based off that, they've decreased their earnings somewhere here to 190, to be between 190 and 230 million dollars, and I'm pretty sure that is a pretty big decrease from the previous guidance. There it is. In February 2024, Air New Zealand issued guidance for earnings before taxation in the range between 200 and 240. Now it's between 190 and 230. So this is a profit downgrade. But the market has not reacted at all to this. A lot of times, if the market is surprised by this type of market or this type of profit downgrade, the share price will drop 10, 20, maybe even 30%. The share price has not done that for Air New Zealand. In fact, it's gone up, which means, without doubt, the market was expecting it. The market was absolutely expecting this downgrade from Air New Zealand. You can just tell by the chart. Share price, this is the daily chart, has been in the downtrend since September last year. So last September, the share price of this company was 76 cents. Now it's 52. So share price has fallen 24 divided by, it's almost 33% in the last 6 months or so. And the share price is getting very close to important support level. In fact, I mentioned this company in my technical update video because it was getting very close to this support level. And I thought there could be support and some buying at these levels. And I thought when I saw this profit downgrade, maybe the share price would fall below 50 cents, which is a very important level. It hasn't done that. It hasn't moved. It's just gone sideways, which again is telling me market sort of, yeah, we knew this was going to happen. So what? And this is the 1 hourly chart. Yeah, it's in a 1 hourly downtrend. And that's a 1 hourly downtrend has sort of amplified, accelerated in the past 7 days or so, which again, this is probably hinting the market was sort of anticipating a profit downgrade from New Zealand. Now, this is really interesting because I was looking at some of the American companies' charts overnight, actually this morning, and a lot of the American airlines, like Southwest Delta, there might be one or two others. The charts actually look pretty good, and I even think Qantas might be looking okay right now as well. I could be completely wrong with that. So probably have to look at the daily chart for Qantas. Yeah, nothing wrong with the Qantas chart. So there sort of seems to be a little bit of disconnect between the rest of the airline in this world, well, in America and Australia, versus Air New Zealand. Air New Zealand might be struggling a little bit more, or this could be a portent to profit downgrades from Qantas, Southwest Airlines, Delta, and I'm pretty sure there's another one, but I can't remember right now. What's another airline in America? Delta, Southwest, not Continental, not United, something else that I'm missing right now. Air Alaska? No, it's not that one. Okay, so let's go to announcement. Top announcement of the day. Number 3, Reddit Lear. Share price down 10%. One of the worst performing companies on the ASX today. Share price down 13%. You'll notice they have released their Appendix 4C. Okay. So first things first, the chart of this company was looking more interesting, intriguing. Share price looked like it wanted to break out. And I think all this company needed was a really good financial report, a really good Appendix 4C, or maybe a profit upgrade or something like that. Unfortunately, it looks like it might have gone in the other direction. So let's have a look at this Appendix 4C, and we'll completely ignore the commentary. I don't care about the commentary in these sort of reports, because the highlight section will point out all the positive things happening. Well, not always. If it's sort of a negative report, like a profit downgrade, they should be highlighting why there's a profit downgrade, and then maybe hinting that these negative factors are probably improving or possibly improving right now. So all these were pretty good. So you can see the highlights are bolded: record revenue, cash from operations, reaffirmed guidance, strong balance sheet, favorable macro environment. So sounds all good. So let's have a look at the Appendix 4C. So receipts to customers, 9.9 million, which was probably lower than I was expecting. Now, I don't know this company all too well, and I'm not sure if there is any seasonality. Now, what I could do is look at this. And I could see, I was just thinking of this right now. I could see if there is any seasonality. So the last 2 quarters, this company had receipts. In fact, what I might do is I'll just update the graph for you. I wish I could program so I could actually do this really quickly, but I can't. I could actually ask AI, couldn't I? Maybe I should ask AI how to do this. So it doesn't take long, to be honest with you. But if I was a programming genius, I'm pretty sure there's a way I could do this much quicker. Anyway, so this is the cash receipts history for Credit Clear. I'll just zoom in a little bit and I'll get rid of Pentanet. What I would do here is I would like to just change. Just going to change. What's happening? What is happening? What is happening there? And I'm just going to make it. There it is. And just increase the font size. There we go. That's a little bit better. All right, so the first thing I always look for when I'm researching a company is I want to see revenue growing through time. So for these companies that do release Appendix 4Cs or 5Bs, I want to see receipts growing through time. Now, you will see a bit of lumpiness there. And with Credit Clear, you definitely see receipts growing through time. The other thing you have to be aware about these sort of companies is whether they're doing any significant amount of acquisitions. And that could put, and a prime example of this was that cybersecurity company. I completely forget what it was called now. That company, receipts were growing significantly through time, but shares and issue were also growing significantly through time because they kept making acquisitions, and the share price just went nowhere. In fact, the share price went down, even at the market cap and valuation of the company was going up because of the massive dilution to shareholders. So that's one thing you have to be aware of is dilution acquisitions companies be making. And I'm not sure if Credit Clear is doing that. I completely forget. But the one thing you do see here is receipts are growing through time. Now, this particular quarter, and just based off this, there is not a lot of seasonality. Last April or March quarter was not significantly down from the previous one. Now, I'd also like to compare quarter to quarter or year on year. So I like to compare this quarter to the previous March quarter. So it has risen. But if you do compare to the previous 2 quarters, receipts are down a little bit. But receipts are not revenue. There could be reasons behind that. Maybe there was someone or a group of companies that were supposed to pay them in this particular quarter and they forgot to, which means if they forgot to, or maybe they intended to, and if those receipts have been collected now, but in this particular quarter, there is potential this particular quarter, the June quarter receipts, will be pretty good. Anyway, so you probably have to delve a little bit deeper into maybe the so then they announced revenue of 10.5 million. So you notice the revenue and receipts are a little bit different from each other. So even though I do focus on the receipts in these sort of Appendix 4Cs and 5Bs, also have a look at revenue because sometimes they can be significantly different, particularly if there's pretty good growth. Anyway, so the market has not liked Credit Clear's Appendix 4C. So let's have a look at the chart. And it did look like maybe the sentiment in this company was shifting from negative to positive. And you can just see that pretty, yeah, they were definitely in a downtrend. And then since the start of maybe 2024, definitely by the start of February, we started to see share price trying to move into an uptrend, but it's really had trouble breaking out. Really breaking out above about 30 cents is what I would like to see. And currently, share price is well, according to TradingView, it's 24 cents. According to ComSec, it's 23 cents. And the reason behind that is TradingView is delayed by 20 minutes, but share price is still above the breakout, and that breakout level is, well, it's 24 cents. So if it stays below 24 cents, then it might struggle here on in. And of course, the other thing I look at is volume. And when the share price was in its downtrend, you can see fairly low volume. Volume started to pick up back in May of last year, and that was towards the bottom. So again, volume preceding share price action. So when you start to see really big volume coming in a downtrend, that could be a sign that the end is coming in the downtrend. Now, it might be delayed by quite a few months. In fact, maybe 6 or 7 months here, but we saw continued high volume coming in, particularly in February of this year. So, and that coincided with share price trying to break out. So Credit Clear, not a company that I'm looking to invest in, but it's starting to look interesting. Market of 110 million, and maybe this particular Appendix 4C has sort of put a lid on the excitement in the company, possibly. Okay, coming in at number 2, we have South32. I didn't expect to put this on my list. In fact, I was just going to mention South32, but the company has released their quarterly report, and the market liked it, up 5.8%. So that is a good day for South32. So quarterly report. I can't remember any other big mining company releasing quarterly report. Ramelius did. So I might mention Ramelius in a second, but none other bigger ones. Maybe they're already reported, most of the other bigger ones. So this company mines a lot. So aluminium, copper, silver, lead, zinc, nickel, metallurgical coal, manganese ore production. So they've got the 9 months year to date. They've also got the year-on-year change. Third quarter 2023 compared to the second quarter, and also the third quarter of 2024. Lots of negative numbers here, quarter on quarter. Lots of negative numbers in the year-on-year change. So I had a quick look at that. I went, okay. So first reaction was slightly negative, but again, the market reacts on whether these numbers beat expectations. And then just based off that, these numbers beat market's expectations. Now, they do have some interesting stuff in here, like nickel. Nickel is on, I'm pretty sure nickel is on the uptrend. Or is it tin? I'm pretty sure it's nickel. So maybe that's one of the reasons there. Silver, copper, they're all doing good. Not sure about aluminium, but it seems like a lot of these particular commodities are doing fairly well right now. However, they did have some struggles, didn't they? There was some, there it is, exception of Australian manganese due to impacts of tropical cyclone Megan. Megan and manganese. Oh, they do sound similar, don't they? Megan and manganese. Megan is just E or A away. If you get rid of the E, put an A there, it's manganese. Anyway, so the market liked it. Maybe there was some guidance here, I don't know. So they go through all the different aluminiums, aluminas, operating performance. It's a lot to go through here. I just did not have the time to go through the whole thing. But the main thing is the market liked it. Share price up 6%. So is this a breakout for South32? Just based off what they're mining, I'm sort of interested in this company, again, for a potential trade. So this is a trade. Share price is in downtrend. Share price was, might have just broken out of the downtrend. So this is down, not a powerful downtrend, but looks like it might have broken out. But let's have a look at the 1 hourly chart. I think this could be, this could be looking interesting. A fair bit of volatility in this company's share price, which is understandable, but it has popped up today. But then again, it was at these levels on Monday last week. So that just shows you the volatility in this company. I'm still not surprised because they are mining some of the more exciting commodities right now. Nickel is really exciting right now. Anyway, so I have traded South32 in the past, and maybe I will soonish. Okay, coming in at number 1, Base Resources, and I'll tell you about my trade in a second. So up 129%, 24 cents. So on Friday, it closed at 10.5 cents. Now it's 24 cents. I did tweet about this. So if you did see my tweet, you'll notice that I actually threw in there MA Offshore. And the reason I threw in MA Offshore is sort of like a hint to management, even though they won't read my tweet. Hint to management, this is how you do a takeover. So Base Resources is undergoing a takeover offer at 188% premium to the closing share price on a Friday. Yes, a 188% premium. Unlike MA Offshore, whose management decided to sell the company for like a 1% premium to the share price, which is, well, I'm being a little bit dramatic there. It was a little bit more than that, but this is how you do a takeover. I can almost guarantee you, no shareholders will be disappointed about this unless you bought at a higher price. But even the implied share price, which is 30.5 cents of the takeover bid, would not be that much lower than historical highs. I'm trying to remember. So I've been a shareholder of this company for at least 5 years, if I remember correctly. So I definitely do like this takeover. And during that 5-year period, I have gotten some really big dividends from this company. That's one of the reasons I initially bought some shares in this company was the dividend. So these are big dividends. So we're talking about upwards of 6 to 7 cents a year in dividends for a company that had a share price of like 30 cents. So we're talking about a dividend yield of about 20%, 20 or 30% per year. So I've recouped most of my capital gain or most of my initial capital just through dividends. So we're talking about 7, 13, 21, 23. Yeah, I've recouped all my initial capital just through dividends. It says here tax-adjusted dividend yield of 23.7%. Dividend yield of 86.2, that's wrong. Well, that's based off the share price being 10 cents. Now, the reason why the share price had fallen a fair bit is because the mine their project they are mining now in Kenya is being depleted, and they want to start a new mine in Madagascar, but it seems like there is some ongoing, not turmoil, but there has been issues with the government over there. There was an election and they needed some they needed some go-ahead for the project to go ahead. So that's why the share price was under pressure, even though there's been a big dividend. I did have some questions to management about why are you giving some really big dividends if you might need some capital to start up that project in Madagascar? But anyway, my questions have been answered. This is a takeover bid. 188% premium. So let's have a look at this particular takeover bid. We'll focus on the presentation because it looks pretty. The other announcement was proposed combination with Energy Fuels, 114 pages long. I'm not calling this a combination or a merger. This is a takeover. You'll understand why in a second. So let's have a look at this particular announcement from nice. It's like an arch. That's Arches National Park, or maybe not. It might be. It's not Arches. That might be Canyonlands in Utah. It's definitely not Arches. It has an arch, but I think this is Canyonlands. In fact, I might have been standing right there in 2017. It's a really nice photo. Anyway. Okay, so here is the transaction overview. So Energy Fuels is a company listed on the New York Stock Exchange. The ticker code for this company, Energy Fuels, is U. I think it has 4 U's. Anyway, so here it is. So Energy Fuels will acquire 100% of the issued shares in Base Resources by way of a scheme of arrangement. So it seems like it is a takeover. Base Resources shareholders to receive 0.0260 Energy Fuels common shares plus an unfranked special dividend of 6.5 cents payable by Base Resources for each Base Resource share held, implying an offer price of 30 cents and total equity value of Base Resources of 375 million. Represents a premium, 188% to the last closing price, and a premium to the 20-day VWAP, volume weighted average price, of 173.3%. And following implementation, Base Resources shareholders will hold approximately 16.4% of the combined group. The transaction is unanimously recommended by Base Resources board, and each director intends to vote. That's not surprising, to be honest with you. Transaction rationale, I don't need to read that at all. I just like that it's a massive premium. And this is the diversified asset portfolio. So this Energy Fuels, they are based in the United States, and they have uranium, vanadium, rare earths projects. They have a few in production. So the Sal complex in production, uranium and vanadium. White Mesa Mill processing facility, uranium, rare earths, vanadium, and Pinion Plan production that has uranium. And Base Resources has a few projects in Africa. And also they have a potential project in somewhere in Australia called Donald. And yeah, don't have to go through this. Combined market cap of the company is going to be probably about 1 billion. It's going to be more than $1 billion. This is pre-transaction. Energy Fuels has a market cap of $1 billion, fair bit of cash as well, which means Base Resources has a fair bit of cash. So this combined entity is going to have a lot of cash on hand. Do they talk about that? They talk about Energy Fuels assets. No, I won't be taking part in the shares. I will be selling this before that because I have no intentions of holding Energy Fuels. If I want to hold Energy Fuels, I can buy some shares in this company myself. Here it is, pro forma company snapshot. Pro forma market capitalization, $1.1 billion. Pro forma cash, $218 million, which means enterprise value is below $1 billion. So, key takeaways. Hope you're watching what this company is doing, what Base Resources is doing, MMA Offshore Management. This is how you do a takeover. When someone offers you a premium to the last closing share price of 180%, that's what you do. Now, let's have a look at the chart for Base Resources and why I don't think many shareholders will be absolutely disappointed in this offer, because we won't have a look at the 1 hourly chart. You can see, I'll talk about why I've bought a trading position in this company in a second. So let's have a look at the daily chart. So share price of this company was in a well-defined downtrend. So I should have sold out of Base Resources probably, just by looking at this chart, probably at about 25 cents back in October 2022. By this point in time, I wasn't concerned about trading Base Resources. I was holding this company for the long term. And so if you have a look at the weekly chart, so this company did have a trouble getting above 34 cents. I remember there was definitely a lid on this company's share price at about 34 cents. So I thought it was more like 30 cents, but about 34 cents. Share price did get to a low of about 12 cents during the COVID-19 financial panic. And you can just see the share price in a bit of a funk from late 2022. Share price went as low as 10 cents recently. So it has bounced off the low. So that's another surprising thing. This is this premium is when the share price was at its low. Now, if the share price was, say, at 30 cents, maybe it would have been much less of a premium. Maybe it would have been only a 30% premium, maybe at 40 cents, that sort of thing. So unless shareholders sold on the way down, most shareholders wouldn't be that disappointed with this particular takeover bid offer. Now, let's have a look at the 1 minute chart. So remember, the implied price of this, oh no, not the 1 second. I have to pay for that. So the implied takeover of this implied price of this particular takeover is 30 cents. Share price opened at 18.5 cents. I wasn't really paying that much attention when the share price opened, but then I saw the share price rally to 22 cents fairly quickly after opening, within 5 minutes. So remember, it opened at 18. It was like it opened at 18 cents, in fact. And then for some reason, I was just following the share price after that, and there was a significant sell-off at about 10:07 a.m. And then share price fell back to 18.5 cents. I went, yeah, I reckon 18.5 cents for this is really good. And I'm going to trade. I'm going to buy some shares at 18.5 cents. So I bought some shares at 18.5 cents. And my only gripe about myself is I didn't buy more. I bought a few, and the share price has rallied. And now that particular trading parcel is already up about 25%. Yeah, so it's up 4.5 cents divided by, do you have a calculator here? 4.5 cents divided by 18.5. It's already up 24%. There you go. And that's in 1 day. Oh, what a great day. Anyway, so yeah, so this is sort of like a no-lose situation for me buying at that price. And I sometimes do see this when this sort of thing comes through. Sometimes you can buy at a nice little discount, because there was a pretty big share price spike on open, and there will be some shareholders who didn't quite realize what was happening, who might have seen the share price spike and went, well, the share price is in a well-defined downtrend. I bought at 24 cents. I could sell at 20 cents. Or they bought in last time the share price was running up at about 19 cents. Oh, I could sell at 19 cents and break even. Oh, I'm going to do that. So that's why there was a little bit of pressure in that first 10 minutes. Some investors saw, or some traders saw the share price pop up and found the opportunity to sell out. But unfortunately, for those, a lot of demand for shares today, you can see a massive volume coming in. Even if you look at let's have a look at the 1 minute chart. Some huge volume coming in all through the day, particularly in the first minute. So yeah, I don't think it's going to fall much from the low 20s. I don't see how it could fall below my share price at 18.5 cents unless for some reason the takeover bid fails, which I'm not sure it will at this point in time. I think this is pretty safe. There could be a competing bid. Who knows? So typically I sell out of a company when there is a takeover bid for a company I own. In this case, I've done the complete opposite. I bought some shares because there was a significant difference between the takeover bid price and the share price at that point in time. Okay, some other companies that did not make it in the top 5. Let's have a look at Ramelius. I think the share price of this company would have rallied today if gold wasn't weak. In fact, it opened at $2.11 and was up for most of the day. So they released a quarter report and guidance update. The most important thing here was guidance update. And if gold was having a good day, this would have made it into my top 5, probably displacing Droneshield because we all knew that was happening. All right, so the most important thing here was the update, in my opinion, because they might have already hinted at the update. So financial year 24 production guidance upgraded. So that's the most important thing here. Now, the reason why I initially got excited with this company was this record quarterly gold production for Ramelius. And I can't remember if they upgraded guidance at that point in time. And if they did, this particular announcement, the one they released today, was sort of irrelevant. It's the initial update. So I can't see any updates here. I can't see any updates at all here. So this could be a true update. So again, maybe the market was expecting it. And on top of gold had been or seeing some bit of weakness. That's why the share price of Ramelius is relatively flat today. A pretty good upgrade, to be honest with you. So they've upgraded their production and downgraded. When I say downgraded, they've decreased their all-in sustaining costs a fair bit as well. And with gold prices increasing, not including the dollar. I'm not sure if the dollar's rallying right now. Who knows? This is a pretty good upgrade from the company. But again, share price has done nothing. Ramelius chart. Let's have a look at that. We'll have a look at the daily chart. Yeah, this is the daily chart for Ramelius. Yeah, a little bit of pressure on the share price today, but that's okay. The daily chart looks pretty good. The 1 hourly chart probably looks pretty good as well. Yeah, the hourly chart looks absolutely stunning. Okay, so that's Ramelius. Next one is Austco. I'll talk about this briefly. So I noticed the company released a pretty good trading update on the 17th. And there was a fair bit of selling on that day and day after, which confused me a little bit because this was a pretty good trading update from the company. So when they released this trading update, share price opened at a 20.5 cents, closed at, got to a high of 21.5 cents. But then we saw some selling. And I was like, why are people willing to sell below where the share price was before this positive trading update? And I think we got the answer today. They went into trading halt, and the company is doing a capital raising. And being the cynic I am, pending the final, so they're going into trading halt, pending the finalization of announcement regarding a placement and right issues. So me being cynical and knowing people out there know this was going to happen, and they went, I'm going to sell my shares before this announcement because there's a chance this is going to be at like a 10 to 15% discount to the share price, which means maybe the capital raising is being done at 17 cents, something like that. So they could buy at 17 cents, sell at 20 cents, or sell at 20 cents and then buy back in 17 cents, or take part in this capital raising, and I just think that's what the pressure was on the share price. And it just confused me why the company released a positive trading update, yet the share price was under pressure. This is why. Possibly it's me being cynical, but I think I've seen too much shenanigans going on in the stock market to know this is not no coincidence. GTI, Gratifii, a fairly small company on the ASX. So share price is less than 1 cent. In fact, it's 0.6 cents. And I'm pretty sure this company has a market cap of like $5 million. Let's have a look. $9.67 million. Shares on issue 1.61 billion. So this is a small company. So why am I talking about Gratifii? It's not graffiti, it's Gratifii. Why now? It says change your name, please. Why? Why am I talking about this company right now? So here is the quarterly cash receipts. They've given me exactly what I do. So quarterly cash receipts over the last 3-4 years, receipts are growing through time. Exactly what I want to see. And then let's have a look at the Appendix 4C and the quarterly cash flow. So here it is, receipts of customers, $8.8 million. And the company was operating cash flow positive in this particular quarter by $402,000. However, they did spend $680,000 on intellectual property, which I could be completely mistaken, but I believe, and this is just by, without anyone telling me this is just me not guessing, we'll say an educated guess, that intellectual property is capitalized, is it the right word? Yeah, capitalized research and development. Yeah. So I probably like to include that because it's an ongoing cost. You can tell it's an ongoing cost because for the year to date, it's 2.3 million. So it seems like they spend roughly between $700 and $800 million, not million dollars, between $700 and $800,000 a quarter on intellectual property or capitalized research and development. So even though the company is operating cash flow positive based off Section 1, I would say the company is not free cash flow positive, and cash has gone down slightly by $200,000. $1 million in cash on hand. Does the company have any debt? I hope Section 7 is clear. Yeah, no. They do have debt, $1.4 million of debt. Did they repay any debt? Let's have a look. You can see repay debt in Section 2. No. Oh, no, in Section 3, sorry. Repayment of debt. Yeah, they did repay a little bit, $108,000. Okay, so that's a small company that is operating cash flow positive and they're growing their receipts through time. I can't tell you what this company does, so let's have a look. Gratifii, I'm pretty sure I've done a video on this, but yeah, I don't know what this company does. Transforming the way that loyalty and rewards are managed and delivered. Our single platform is a complete solution offering affordable market-leading functionality and configurability. So something to do with loyalty and rewards schemes in Australia, New Zealand, and Southeast Asia. So definitely, possibly one to put on your radar, but I'm pretty sure the chart looks pretty bad. So this is probably a reason not to put this company onto your watch list. So this is the 1 hourly chart, looks pretty bad, and the daily chart looks pretty bad. However, in saying all that, so early in the video I said volume sometimes leads price action. So what are we seeing in the last few weeks? Some pretty big volume coming in. And you compare the volume now to what it was 2022, 2023, it has been increasing the last 2 months as the share price continues to fall. It's been as low as 0.4 cents. Even if you look at the hourly chart, and this is where I noticed it, there's been some big volume coming in the last, in April. So this could be sort of near the bottom for Gratifii. But I would be a little bit concerned about the cash on hand. And I'd like to see this sort of quarter continue. And I'd like to see the company becoming free cash flow positive, not just operating cash flow positive. So Gratifii, a company to put on your watch list. And finally, the last company I want to look at, I won't look at Sequoia. It's just an update. And I'm pretty sure the company share price has not moved because they have reconfirmed guidance. Yeah, the share price is actually down. So the last company I want to look at is Babylon Pump and Power, sorry. Another company with a very low share price, 6.5 cents. Share price has up. And I'm going to have a look at the market cap of this company. I'm pretty sure the market cap of this company is $10 million. No, 6 million. 15 million. Oh, or has 2.5 billion shares on issue. Now, this company does look interesting. However, in saying that, it's been looking interesting for a while because the company, again, is operating cash flow positive. So they actually mentioned it. The highlights: positive operating cash flow of $900,000. There you go. First highlight they have. They've also got a bit of a cash receipts history, only going back 4 quarters. I like a little bit of history than 4 quarters, but they've also included an operating cash flow graph here. That's something I don't do. I just focus on cash receipts and then I go to operating cash flow. And this company's been operating cash flow the last 4 quarters. So there are things to like about Babylon Pump and Power. So they sell pump and power stuff. They don't have a back section here. So they sell pump and power stuff. So let's have a look at the quarterly cash flow. So almost $13 million of receipts and operating cash flow positive, $861,000. For the year to date, operating cash flow positive, $3.7 million. Now, this company might be capital intensive, so they might have to spend a fair bit on capital expenditure. So let's have a look. They have spent a fair bit of money on businesses, acquisitions, $2.3 million in the first 9 months, and $1.7 million in capital expenditure. Take that away from the operating cash flow. The company is free cash flow positive, $361,000 in this quarter, and about $1.9 million for the year to date. Do they have any debt? I'd probably say they have a little bit of debt just based off this. They have increased the debt by about $300,000 in the quarter. So let's go to section 7. Cash on hand, only $901,000, but they've been existing on low cash reserves for a while, it seems like. And section 7, they have about $10.8 million of debt. Interest rate's not that high through NAB, but still $8.8 million of debt. Not much cash, which means the enterprise value of this company is about $25 million. So that's the true value of this company, not $15 million as per the market cap. So an interesting company that is operating cash flow and possibly even free cash flow positive in the last trading 12 months. So is the market getting interested about this company? Let's have a look. That's the 1 hourly chart. Let's have a look at the daily chart. And the answer to that is no, not quite. Share price has been a downtrend. I would say, though, I think the share price is starting to go sideways, starting to consolidate. Share price has been as low as 0.4 cents, and that low was first reached in September last year. No, September 2022. So it could say this company is illiquidly traded. So the share price is sort of trading in a range between 0.4 and 0.7 cents in the last 16 to 18 months. So you'll want to see a breakout above 0.7 cents at this point in time. And the other thing you look at is volume, but the volume not doing much at all. Some high spikes on occasion, but that's probably just cross trades, that sort of thing. Okay, so that's Babylon. And that's all I got for you today. There's no other charts I am thinking of looking at. However, I did sell some shares today. Okay, so Findy. I'll talk about Findy. I did not completely sell out of my holding in Findy, but enough to sell or take some profit. So I sold out of 2/3 of my position. The chart was looking ugly enough to sell out. The 1 hourly chart was starting to look like it was moving into a short-term downtrend. And one of the interesting things about the open this morning, and I found it really intriguing, there were some panic selling this morning. So Findy, we saw some panic selling. Step 1, we saw some panic selling. What I mean by panic selling, let's have a look at the 5 or the 1 minute chart. So on open this morning, share price of this company fell all the way down to $2.30. This was a dump on market on open. Someone just had to get out. They couldn't handle anymore. The emotions, just dump on open. And the share price recovered almost immediately. Don't let that happen to you. So when I sold or took my profits, I just waited for the share price to recover back up to $2.58. And I'm holding 1/3, sold out 2/3, holding the next third just to see what happens. And I think if the share price struggles even more, potentially I will take profits in the other bit. But I hope that I don't have to. I hope. So I sold out of Boral. I got a nice little dividend with Boral. Share price fell just below where I bought in. And this is based off the 1 minute chart, not the 1 minute, the 1 hourly chart. I just saw a little bit of weakness. There's a profit. They went ex-dividend. I'm pretty sure it was the 17th of April. And the 1 hourly chart looks pretty ugly there. So I thought, yeah, if I'm following my new strategy, sell out of this company, take a small profit based off the dividend, and also sold out of Treasury Wines. Because the 1 hour chart starting to look bad. And this is a fairly similar chart to a lot of the charts I'm seeing, not only in Australia, but also in America. A fair bit of weakness in the short term. And this is what I am seeing, this sort of chart. So took a nice little small loss with Treasury Wines. I'm willing to take a small loss. That's the whole point in doing this. I'm more willing to take a small loss than a large loss, and I'll let my winners run. Another company that I was thinking of selling, some, not all, was Step One. And my sell point for this company is $1.61. So I should have a look. No, $1.60. So if I see it fall to $1.59, I might sell a portion. And it's just staying above that level. And this was another company where we did see some panic selling on open. So there is my sell point. This dotted line, not a dash line, a dotted line, is my sell point. You can sort of see why it's my sell point. Share price got to this level back in April. This is 1 hourly chart. And got to this level again today and last week, and it's staying above it. So there is a little bit of support at these levels. But if it falls below that, say falls to $1.55, I will sell out at least 1/3 or 2/3 of my position in this company. But it needs to do it first. I'm not going to sell straight away. And what else? Findy, Step One. That's it. I had a few other companies on my sell. I have a sell list in front of me. So Hub24, Bravura, Cobram, Ansell, but all those companies, I'll just show you those quickly. So Hub, and this is all based off 1 hour charts. This is probably a sell, but we have seen a really nice rally, and I might sell into this rally with Hub, just based off the 1 hour chart. Now, there's concerns that maybe this rally, maybe this day on the ASX will continue for the rest of the week, particularly if we see a really bullish week on the American markets. But just based off the 1 hourly chart, and it's been in a 1 hour uptrend for a long time since I bought in. So just based off the 1 hourly chart, I probably should take profits with Hub. Bravura, on the other hand, is a little bit different. So my sell point for Bravura was at $1.28. I've got it right here, $1.28. And we've seen a really nice rally off that. In fact, share price of this company is up 6%. So no reason to get interested about selling this company just yet. Not as much weakness in this company as some other companies, like, say, Treasury Wines. And Cobram, close to selling this one for a small profit. And this sort of looks similar to, to Hub24. So a nice 1 hour uptrend, and the share price has sort of turned over in the last few weeks. So I bought in, there it is, there's my buy, 168, share price now 178. Okay. And I think that's all I have for today's video. Well, the other one was sand, but I won't show you when. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.